Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And guys, look like we got that evening star pattern playing out. That's a bearish reversal pattern. Big red candle coming in for today. It was a pretty interesting day. It was a trend day to the downside. Usually I say that's an easy to trade day, but it was a bit tricky, I'm not gonna lie. But before we get into those details, go to Financial Juice. Powell had the meeting today, and you know, Financial Juice, they report what was said and stuff like that. That's why I love Financial Juice. It's free, guys. Anyways, so it says here, Fed Powell, the ultimate level of interest rate is likely to be higher than previously predicted. Fed Powell, if the totality of the incoming data indicates that faster tightening is required, we are prepared to accelerate rate hikes. Okay, so that sounded hawkish to me. Okay, so in today's video, I am going to talk about how I traded today. That is requested by some viewers and some Discord members. They found it helpful, so I'm gonna do that, and I'm gonna give you guys my trading plan for the next day. All right, so let's prepare. So here is a 15-minute chart, okay? And look at that big red candle, okay? Yellow line right there, that's my 404 level that I was watching. All right, I wrote here, I give the bull case scenario and the bear case scenario on my Discord. And I mentioned here, 404 remains as support. As long as it holds, bulls still have a chance to clear the 20 DMA, which I would have been bullish if bulls cleared the 20 DMA. Bear case, I will switch to bearish if SPY drops below 404 support. So I was definitely watching out for that first setup. First setup I had for the day, 404 was support, 405 was the first resistant. When market opened at 9:30, it chopped for half an hour, which is to be expected. A lot of people were waiting for 10 o'clock for the J. Powell meeting. However, it was very interesting because, you know, Uncle Charles, I was watching this chart like a hawk. Okay, I trade like a sheep, but I was watching the charts like a hawk. Before Powell even spoke, this market just dropped. It took down that 404 support level. Okay, before Powell even spoke, maybe insiders already knew this guy was going to be hawkish, and these guys just dumped. They just dumped. Okay, so this, you know, this just proves my point about the importance of price action trading. Knowing the levels, knowing the setups, and just trading it. Is, you know, a lot of people might have been, you know, waiting to watch the meeting. Yeah, and I'll tell you, I was also watching the meeting. I had one screen up where I can watch J. Powell's, you know, the J. Powell meeting and all the politicians yelling at him and stuff like that. But and of course I had this screen where I was watching the charts, waiting to trade. Okay, broke down 404. And that's where I entered put. Well, I didn't enter puts right at 404. I entered puts around 44.5ish. Okay? Let me get the arrow right. Around 44.5 is around there. Okay? I didn't get the perfect entry. Right? Had to react quick. It was dropping fast. I had to get in it. And I was lucky enough to get in it. Took my next profit at the next level. Level to level, which was a 41.5 to 402 zone. Okay? From there, I left runners, and I was able to take the rest of the profits around 400, and it was a good day for me. It was a good day. But yeah, that's pretty much how I traded it, okay? Now, some things I do want to talk about, because once we broke out 41.5, you see on this big candle, it started chopping a bit, all right? I was only bullish if SPY would have recaptured 402. Now, here's where it gets tricky. You see this candle right here, the 1030 candle. It literally bounced up to 403.22 before selling back off. Okay, that would trick a lot of people out. You know, you see the 41.5 level recapture, or even the 402 with that big pop. RSI was really oversold at that time, and it did not bounce all the way to the next target at 404. So, you know, and it's very tough. If you would have scalped it, you would have made money, right? But if you would have played it level to level, you probably would have got stopped out, okay? In hindsight, you can say, hey, I should have scalped it. But we're not trading in hindsight. We're trading in real time. And the thing that I want to say to you guys is the importance of stop losses. The importance of stop losses. And you know, if I could accomplish anything in the stock market community, it would be to make stop losses cool. It would be to make it something worth bragging about. Something, you know, and I just, if I could get people to feel good about cutting losses the way they feel good about getting a winning trade, that would be an accomplishment to me. Maybe impossible, but that's one of my goals. Okay, as a YouTuber that covers the SPY and stuff and trading, is to get people to look at at cutting loss as a great thing, as a feel-good thing, even though it's so hard to do. And let me tell you, if you're able to do it consistently, you are, in my opinion, someone worth praising, someone worth admiring, someone worth respecting. I got a lot of respect. If I started my own trading firm, I would pick 10 times out of 10, I would pick someone that's good at risk management over someone that's, you know, that may have high accuracy with their trading, but they can't manage risk. Okay? Today, there might have been some people who probably got stopped out because of all this choppiness. Okay? Look at this candle from 10 to noontime. It was very choppy before we started getting a clean move around the afternoon to the downside. But this time was choppy. But that's why I want to say to you guys, I want you guys to look at respecting your stop losses as a great thing. There was a lot of people today. I'm not saying anyone in my Discord or anyone that's watching, but I'm pretty sure there was a lot of people today that tried to play a reversal setup or tried to call a bottom. And when the trade went against them, they did not respect their stop loss. And they're probably very close to blowing up their account. Trend days, when the market trends, I always say it's the easiest day to trade, but that's the days where retail traders get knocked out because they don't trade with the trend. They go against it. And that's fine if you're playing counter trend trades, as long as you are keeping your edge and respecting your stop loss. It's okay to admit when you are wrong. All right? So yes, there is a thing where market makers, they go stop loss hunting and you know, you get stopped out. There are ways that we can do better with our stop loss where you know, maybe it's a little too tight, you know, but I will always say, in a game of probability, to take the road that where you will lose less money. Okay? There is more money lost with bag holding and not admitting when you're wrong than cutting stop losses. If you're one of the traders that keep getting stopped out, maybe because your stop loss is too tight, we could figure it out. Let's figure out how to make your stop losses not as tight so that you give your trade room to play out. Okay? But I just don't want you guys to think that not having a stop loss would be better for you, because in the long run, you could win 5 in a row, 10 in a row, 20 trades in a row. But all it takes is that one trade where you go in and then it's wrong, and because you can't accept a loss, you don't want to cut your loss, you blow up your account and all those other wins that you had are wiped out. All those gains from weeks and months of winning wiped out. It's happened to so many people. So I'm asking you guys to be wise, to learn from the people who came before us, and learn from our own experience that respecting stop losses, managing risks, it's always the way to go. All right, now I'm not gonna waste any more of your time. I'm gonna get straight to the daily chart analysis now. Okay, so here it is, evening star pattern of bearish reversal pattern. We lost some critical levels here. We never got above the 20 daily moving average for the SPY, and it rejected from there, and we took out the 38.2 fib level at 41.68. We also closed back below my green trend line here. We got a strong false breakout setup. The RSI is not oversold on the daily chart, so if SPY does decide to go down, that it's possible and it has more strength to go down, okay, based on the RSI. Okay, so the levels to watch for tomorrow, if you are bearish, for bearish continuation, we need to see this green trend line hold as resistant to see more downside. Okay, that's at 399.5, but I'm gonna round it to 400, so give it a zone. 399.5 to 400 is the first breakdown level or resistant level that bears want to watch and want to see it defend, okay? As long as that level hold, the next support is at 396.5 to 397 zone. There is a gap at the 397, around the 397 level. This 15-minute chart, if I scroll to the left, you guys can see the gap over here, okay? It's a gap around 397-ish. Okay, so we could fill that. And if the 50% fib level at 396.5 fail, I will favor a test of 395 and that critical 393 to 393.5 zone right around where the 200 daily moving average is. Okay, so 399.5 to 400 is a must hold. We got that 50 daily moving average is around 398.3 as well. I keep forgetting to mention it, but I got it today. If that level fails, 396.5 to 397 zone gap fill is in play, and then maybe we go test 395 in the 200 daily moving average again, okay? I'm thinking if we test that 200 daily moving average again, I'm thinking it's not going to hold again. I could be wrong, and we could get some buying pressure there again, but I'm thinking it's not going to hold. Maybe we get a lower low. Why do I think we might get a lower low? Because right now, it's looking like a lower high right here with the March 6th high right here. It's looking like a lower high. All right, so if the bear case plays out, this could actually be a lower high, and we could be heading for a lower low. We got to see that 400 level defend as resistant. 401.68, the highest. So if the bulls do clear that level, bears want to step up at 401.68, the highest. All right, and don't want to go past that to keep the bear case scenario, to keep today's breakdown, because those are the levels we broke down today, to keep today's breakdown intact. Okay, so that's the bear case scenario. Bull case scenario, we just have to recapture the levels that were lost today. We need to see the 50 daily moving average defend that support, right? We need to see get back above this green trend line, 399.5 to 400 zone. We need to see 401.68. We can round it up to 402 because these levels are never pinpoint. All right, 401.5 to 402 zone. See that clear, and then we can go test the 20 daily moving average again, and maybe this time we could break through now that SPY has given us some type of pullback. All right, above the 20 daily moving average, above 404.2 would be bullish. Okay, I'll favor 406.5 and that level at 408, and this orange trend line I got is around 409.35 now. Okay, so above 409.35 would be a breakout of this trend line and would be pretty bullish. We go test 412 and 414. All right, that's the bull case scenario, and it starts with a recapture of 400 and 401.68. Okay, I think Powell speaks tomorrow again, so prepare for some volatility. I'm hoping we get more volatility when he speaks again, similar to today, but maybe a little easier to trade. Okay, and hopefully we all just end green, God willing. Okay, so let's move on to QQQ. QQQ, it cleared that 20 daily moving. It closed above the 20 daily moving average yesterday. I mentioned to you guys, watch for the breakdown, because if it breaks down, we get a false breakout setup, which is very bearish. Okay, so as long as below 299.2, that's the 20 daily moving average is now, I'm gonna be bearish, but I do still need to see the next support level failing, which is at 294.5. If 294.5 fail, look to short, putting 290 to 290.7 zone in play. That's around the 200 daily moving average. Then we got the 50 around 288, and if that fails, we go test 284 and 281. All right, I'll be bullish if QQQ can recapture or clear that 20 daily moving average. I got first resistance at 298. If it cleared 298, let's see if it cleared 299.2 is the 20 daily moving average to put 302, and there's a gap. Actually, there's not a gap. Okay, so we cleared 302, it'll be 304 next. And then a test around 305, pivot high over there. Pivot high over here from February 13. And then a Fibonacci channel line around 308. Okay, so I'll be bullish above 299.2-ish. Okay, got to recapture that 20-day. Otherwise, stay bearish on the triple Q. IWM got the breakdown. Okay, remember we got that green trend line that I got here. We had a false breakout of the green trend line, and today is showing follow through. All right, as long as below 187.6, I'm bearish on triple Q, on IWM. Excuse me. Next support is at 185.6. If that failed, 182 and 178 are the next targets for IWM. Okay, I'll only get bullish on IWM if it can get above this green trend line here at 188.65. All right, Apple, false breakout on Apple. Okay, it was an ugly candle, gravestone candle. Is that a gravestone doji on Apple yesterday? And it closed above this Fibonacci line at 153.5. Broke it down intraday. Bearish. Okay? False breakout setup. So to show follow through, it needs to break down 151. Also this support, 151 to 150.6 to put 149, 146.5. There's a gap around 145.5-ish. And then 143.5, okay? So as long as below 153.5, the false breakout setup is intact. I just need to see it follow through. Break down 151 to 150.6 zone to trigger more downside. I will only get bullish if it can recapture 153.5 to put 155, 156.6, and 157.5 in play, okay? Tesla, like guys, Tesla's looking bearish. I'm bearish on Tesla right now. And here's why. Based on the price action, of course, okay? March 3rd, last Friday, we got a test of the 20 daily moving average. We got rejection. Monday, we saw follow through after that rejection from the 20 daily moving average, where it rejected more and closed lower. Today, we closed even lower, but also breaking down that 23.6 fib level. All right, we are at the lower Bollinger Band, but it's also a chance that tomorrow the lower Bollinger Band will expand, giving Tesla room to drop further. But as of right now, I am bearish on Tesla as long as it's below 190. Okay, next support is at 186. Loss of that level should trigger more downside down to 181.5, 180. 175.8 and then 173.2-ish. Okay, I will only be bullish on Tesla if it can recapture 190 to give us the false breakdown setup, putting 194, 196, 199 and the 20 daily moving average at 200.7 in play. Okay, here's DXY. Big explosion on the DXY. Okay, I've been saying can't get bearish on the DXY until it breaks down 104.1. Right now, it's just been testing that level as support after it broke out of it back in late February. Today, it finally showed some follow through and exploded to the upside, and also cleared this Fibonacci channel line around 105.5-ish. Okay, if it can keep this momentum up, stay above 105.5. The next target I got is 106.9. Okay, if DXY continues to stay bullish, SPY could continue to stay bearish. All right. And here's XP. Oh, VIX. That's Discord stuff, guys. Sorry. So here's the VIX. We got this potential double bottom here. Okay, potential double bottom here. VIX is showing some green moves here, some bullish moves popping up over here. Okay, and it took out. I think I have a resistance here at 19.5. So yeah, if it can clear 19.5, this pivot low right here on last Thursday, that 21.2 level is in play. Okay, that's a 23.6 fib level. I'm telling you, if VIX can get above that, now the context is a little different now. But if VIX can get above that after this potential double bottom here, it'll be pretty bullish above 21.27. All right, above that would be bullish on the VIX. But as of right now, I'm still watching that 18 support level. To be bearish on VIX, it has to break down 18 to put 17 and 15.5 in play. Okay, right now, potential double bottom, but it still needs to show follow through, clear some resistance, 19.5 and 21.2 to trigger more upside. Okay, let's end this with the option flow. Oh, that's dark pools, guys. Let me see. SPY filter for 500k premiums or above. Okay, 65% is in the puts right now. Okay, that's the sentiment. The only one that has a big size order to it is this one, but it's a block order, so not very aggressive. 1.9 million in premium, 385 strike price for March 24th. Lately, we've been seeing a lot of what is it, calls or lately for the end of March. So big money with bullish, showing bullish signs on March with their calls, but today not so much. Okay, triple Q 66% for puts. Okay, so we're still seeing the option flow orders for triple Q's bearish. So it was a little strange when SPY showing bullish, but triple Q continues to show bearish. And IWM as well continues to show bearish. And this is a lot more. This pretty aggressive sweep order here. Over 983,000 in size, over 5,655 in size. 182 strike price. That's pretty aggressive for March 24th. Okay, so puts. This one's a block order for 210 strike price for calls. That's a block order though. January 1924 as well. Okay, this one's a sweep order, definitely worth paying attention to. I think over 6,500 in size, 180 strike price, but its expiration date is for April. Okay, April 21st. Okay, let's see what's next. Tesla, Tesla split in the middle, 50-50 today. Okay, indecisive. Apple, 84% into calls. Nothing big size, but all these calls are for these two are for 2025. Goodness, so a bunch of long-term stuff. Apparently, long-term investors, people like that maybe. Okay, not really sticks out. And VIX, not lately for VIX. Today, we did get some puts for VIX. Okay, so there you guys have it. I hope you guys found some value in this video. Thank you guys so much for all your support. If you want more content from Uncle Charters, please consider joining my Discord. Other than that, have a great evening. Peace.